Bismillahirrahmanirrahim. Salatu wassalamu ala Rasulil Kareem. Assalamu alaikum, all the participants, and especially our guest today, Dr. Jamshaid Anwar Chattha Sahab, and thank you for joining us today. Today we are very, fortunate to have Dr. Jamshaid with us, who kindly agreed to speak on a very important topic about the international development of Islamic finance. So on behalf of IBA Center for Excellence in Islamic Finance, Dr. Saab, I'd like to welcome you formally for the forum and thank you for taking the time. I also like to thank all our participants who have joined from different industries, different part of the banking sector, and I see some of the participants who have joined from across the border as well. So this is the benefit of now online sessions, that we have reduced the boundaries and we can learn and share from each other in a manner which was not previously possible. Or so an IBA has also taken this step to become virtual, or probably the leader of in organizing these type of webinars for topics of which are related to Islamic finance and which are of the interest to a larger audience. I'd just like to introduce formally Dr. Jamshaid. Dr. Jamshaid is an advisor for Islamic banking supervision at IMF, and he was the former Assistant Secretary General for IFSB Malaysia. He has done his PhD from International Islamic University Malaysia. He has worked in different capacities. He has worked with Central Bank of Kuwait. He has worked in Malaysia at IFSB. He has also been engaged with Islamic finance engagement at Canada, in Singapore, and in Pakistan. Now with his latest engagement with IMF, and some of us also sometimes become surprised that IMF and Islamic finance. So IMF actually has accepted Islamic finance, and IMF is now have experts which deal in Islamic finance. And this also shows the acceptance and growth of Islamic finance. So without much delay, Dr. Jamshaid, over to you. And once again, thank you for joining with us. I will request the participants that you can post your questions. Today's format is that we have almost an hour or so. So we will request the participants to use the chat facility, and if they have any questions, they can type the questions. So after the presentation by Dr. Jamshaid, we will take few questions till the time permit. And so that's over to you, Dr. Saab.
Thank you very much. Bismillahirrahmanirrahim. Assalamu alaikum, and good morning to Europe, and I think good afternoon in Pakistan, and I think good evening in Kuala Lumpur or Singapore, wherever you are, guys. Thank you very much for inviting me, Brother Ahmed. I think let me congratulate you for this kind of virtual having series of seminars. This is something very important for the industry, as a contribution, and I think as something that would help the industry, and I know you very much professionally and personally. You and your team have been engaged in this process of development of Islamic finance, promotion of development of Islamic finance very generously in Pakistan and also in the regionally. Thank you very much for sending the invitation, and of course I want to also take this opportunity to thank all of the participants who have joined us today, and we understand everybody is busy in their schedule. I will try my level best that this 1 hour or 60 minutes I would try to share my humble experience globally and in terms of Islamic finance development, and how the Islamic finance is looked at it globally. Definitely, you can't expect me in this session to explain you what is murabaha or what is the contracts of Islamic finance. I would leave that to a separate session maybe in the future, but rather I would be very interested to take you to something that will give you a very high level overview of Islamic finance globally, and then my particular views on the development of Islamic ecosystem globally in terms of the key trends that we are facing nowadays and why Islamic finance matters, basically. As rightly pointed out by Brother Ahmed, many people are actually surprised as why the IMF is, what's the role of the IMF in Islamic finance? What's the connection between the IMF and Islamic finance? And then I will also try to address key points from regulatory impediments to the development of Islamic finance. And also, I will talk about the key components on the development of effective regulatory regime for Islamic finance, with basically a regime that reflects the seriousness of any institution, regulatory institution, and the country in terms of Islamic finance development. And then the very hot topic, COVID-19 pandemic implication, and then how does it relate to, to the Islamic finance, and how can we develop a sustainable Islamic finance regulatory ecosystem globally. So this is a kind of the summary of the points that I'll be talking about in next 60 minutes. Please feel free to raise your questions anytime on any slide that you want. I'll be happy to interact with you at the end of the presentation, and we'll be answering your question as well. Look, what the scenario right now in front of us. We have now COVID-19 pandemic scenario, which is basically kind of invisible threat, and we are at kind of a reflection point where we know that the headwinds are stiffening at least next 6 to 12 months, and this 19 outbreak continues to wreak havoc on economics across the globe. It has plunged the world into recession, made economic recoveries a daunting uphill task ahead of the financial industry, and also it has threatened the stability of the global financial system. Now, when we talk about the how it has threatened the global financial system, I think the thing that will come to us is that the problem is we don't know the magnitude of the threat, how long it will take, and it's kind of a reflection point where there's enormous pressure to the governments and regulators, institution, financial institution, in terms of the negative GDP outlook. We have a scenario of low yield, deeper recession. There's a record debt nowadays going on, and then also the financial market disruption, especially the emerging market outflows, quantitative easing by the Fed now, which is ultimately highlighting the issues of fiscal deficits and consolidation. And at the end of the day, as ex-regulator, I think our concern is also that what are the regulatory regimes and response from a banking regulator in terms of measures, microprudential measures or macroprudential measures to counter the COVID-19 pandemic scenario for the effectiveness of the banking system, including the Islamic Bank. You see, one of the things that comes to when we talk about COVID-19 is that, it says, we don't have to worry about, because it's not about Islamic anymore. It's about conventional as well. It's about Islamic banking as well, because the pressure is not coming from a particular financial sector. The pressure to the global banking system is basically is coming from the health crisis. So the origin of this crisis is the health crisis, which is contributing to the economic crisis, subsequently to the financial crisis. And Islamic finance being operating in the same financial environment is going to be definitely not immune from this crisis. And one thing you will see is that there are challenges to the emerging markets because they need to get access to finance. Their fiscal deficits are they are increasing, and governments are carrying a lot of measures. The problem is that if you global market is not is okay, but for you, but the problem is for you as a jurisdiction is that is your local market not developed. If your local market is not developed for bond market or scoop market, then you're going to have a severe problem in terms of accessing the finance from the international market. Private sector can help, but the problem is the lower policy rates dictates that if you have a lower policy rates, the banks would be reluctant to provide support to the private sector. That's as a result, we have seen some regulatory changes. In particular, Basel Committee has provided changes in terms of Basel III implementation. They have deferred the implementation for conventional banks. IMF has provided, key recommendation in May 2020 to supervisor on COVID-19, how to handle it. And then also, AOFI was the first one to respond to the global industry, and they responded in May a comprehensive, guidelines to the institution in terms of the treatment of ECL, the governance and ethics, and all those requirements. IFSB has recently issued just a statement, but it has issued a comprehensive, guidance to the supervisors in terms of what they need to do, regulatory measures, micro or macro prudential, and also the treatment. Rather, it has issued a few page statement for Islamic banks regarding IIFM. It's not that directly regulating any particular market, so we can't expect a particular guidance on that. So if you look at the scenario now, what I was talking about earlier, the invisible threat, just for a second, take a pause and think about. There is a discussion that this crisis, COVID-19, is worse than GFC. Now, when we say it is worse than GFC, we're talking about in terms of magnitude, in terms of the impact, in terms of the social cost, in terms of the physical, psychological, issues. Yes, we are seeing the numbers coming from the IMF very clearly. In fact, the IMF, when they issued a report in April 2020, initially their forecast was lower, and then they had to revise the forecast in June again, which means basically they expect the more contraction in the GDP growth. That tells you the story that there is unprecedented outflows, there is a deeper recession. But the key question is that if this crisis is worse than the GFC, then I think we should be expecting the real significant implication going forward in terms of insolvencies, in terms of bankruptcies, in terms of defaults, in terms of financial restructuring, and so many things. The NPLs, the NPFs, we should expect worse scenario, because if it does not happen, right? I think then we are basically, trying to create a hype unnecessary. But in the recent estimate from different institutions, it appears very clearly that the crisis, the implications are going to be very severe to the economy. Because the problem is that right now we are in the crisis mode. The implications are, you can't see the lag effect now. So when we expect, particularly the banks trying to submit their reports of Q3 or Q2 results to the central banks, I think we'll be able to see the real impact in the Q4, which is 2020. The real in magnitude, the consequences of the pandemic to the institution. And as a result, we have been now discussing, and different regulators are discussing the possibilities that, look, should we expect the recovery? Because recovery is a debate now in different countries, different institutions, including Islamic banks, especially in the stress testing for the top-down approach for central banks particularly. The IMF says that, because of this pandemic, we have lost at least the 10 years of progress. So imagine if you go back to 2010 or 2009, and then you come to the 1920. So whatever progress was achieved in terms of economics or growth, it has been lost now. So we are going to square one again. So the key question is that, are we going to expect the L-shaped recovery, which is a severe recession, or are we going to put the V-shaped dynamics, short-lived recession, which is quick recovery, or are we, expecting the U-shaped dynamics, which is delayed recovery? And in fact, I like to share with you the IMF, the Fed recent, especially the vice chair of the Fed, Randall, he in his speech to on 19 June, I read his speech. It's fantastic, and he confessed basically in that speech in terms of stress testing that, look, this is not something we had designed our stress testing. So imagine if the Federal Reserve, one of the strongest central bank in the world, is saying that we had not envisaged this kind of stress testing data and methodology for this kind of scenario. You can imagine the stress that will be going to the other central banks. Now, as a result, in this stress testing, they propose that, in their sensitivity test, first they say we need to have a rapid V-shaped recovery, followed by the slower U-shaped recovery, and that goes to the W-shaped double-tip recession. So these are three different possibilities that the Fed is expecting, in the jurisdiction. So imagine if the same thing applies in different jurisdiction, the Islamic Bank being part of the same financial system, they will have to take into all those plausible scenarios into their stress testing. So we'll see the dynamics of the recovery in a more appropriate time. So from Islamic finance point of view, that was the kind of give you a global overview where we stand. So it's not going to be, if somebody tell you that Islamic finance is going to be immune from this pandemic, I think you need to listen to him twice again, because that's not going to happen. And the reason is very simple. I'll share you a couple of slides later as well. It's a very logical reason. When the global financial crisis came, the Islamic banks were not affected directly because they were not involved in toxic products. They were not involved in derivatives. They were not involved in all the synthetic transactions, the mortgage, that kind of subprime. They were basically affected because they had exposure to those some of the bank regionally, which ultimately collapsed, and then as a result, they had to book those losses on their account as well. So that was, to me, kind of a ripple effect, a second round effect the Islamic Bank had to face. As a result, we are in a situation now where Islamic finance. So with the Islamic finance, if you look at it on the chart, you can see that except two jurisdictions, one is Iran and Sudan, which has almost 100% market share in Islamic banking and finance. Now that is because by the virtue of their constitution and also the law, they are required to have Islamic banking transaction. However, there's a third country on the verge now, which is the Libya, and I've been working with the IMF on advising the central bank on, the regulatory measures and also the others. It's going to be the third country actually in the world that is going to be the full-fledged Islamic financial system. They have their parliament has approved a law that requires all the institutions in the country to be transformed into Islamic financial institution in future. That means that it's going to be the third country in the world. If you look at the Pakistan is it's kind of below 20% market share. It's still it's one of the going to be a systematic important country for IMF as well, because the total Islamic banking assets here are actually more than 15% of the domestic banking sector assets. This actually highlights the issue for supervisors in terms of level playing field, the graded convergence, the proportionality, the regulatory arbitrage, and also the how to apply discretion into to Islamic banks. And if you look at the business model of Islamic banks, and in particular, you look at the balance sheet perspective, and I think this is very important to understand before we heads on, discussing the proper implication from supervisor point of view, and also the international regulatory development. See, the balance sheet basically requires the banks to hold the assets on their balance sheet. They have to engage in different contracts. They have to engage asset side in different ways. On the liabilities side, we have additional components which are not in conventional bank. For example, the establishment of profit acquisition reserve, investment risk reserve. We have tier two scoop, different types of scoop that form as a part of capital to Islamic bank basically. As a result, you drive a lot of implications in terms of governance, in terms of investment account holders, in terms of capital adequacy, in terms of role of risk-weighted assets, and also the role of risk absorbent feature of PSIA, and also the additional parameters that we need to deploy. For example, a Sharia board, we have its internal Sharia review unit, external Sharia review unit, internal Sharia compliant unit, basically. And these are the things that makes the Islamic banks more unique in terms of how their intermediation function is performed in the market. Now, why Islamic finance matter? As I said, Islamic finance now it's not something swimming against the tide. Basically, it's basically a reality. It's something. It has a universal appeal. It has a full integration. It has been internationally recognized. It has been accepted. We have more than 2.1 trillion-dollar industry, uh, and these international institutions, for example, the multilateral institutions like IMF, the World Bank, Asian Development Bank, Islamic Development Bank, Financial Stability Board, IOSCO, Basel Committee, IAIS. These are the international institutions, and directly and also indirectly, they are supporting Islamic finance. Now, why indirectly? Because some of them actually they have their own mandate. For example, Basel Committee, is a committee that set the standard for commercial banks globally. Now, the Basel Committee is also, the BIS, which is basically the host of the Basel Committee, is the member of the IFSB as well. So, meaning that the IFSB is being supported by the Basel Committee. The IMF is also the member of the IFSB, IFSB institution that I served for quite a long time. And the World Bank, Asian Development Bank, they are also, the multilateral institution helping the IFSB, Islamic finance. And also, if you look at the other countries which are non-OIC Islamic countries, for example, China, England, Hong Kong, Kenya, Luxembourg, Singapore, Mauritius, Japan, Korea, Zambia, so many others, they are actually the member of the IFSB, and they are also actually contributing, different capacity, the development of Islamic finance. So this is an international, recognition, international, appeal, and most of the people actually they asked me what the IMF has to do with. I think the same question Brother Ahmed also asked. You look at the IMF has been helping the supervisors not just now, it's last 20 years, and IMF engagement with Islamic finance is kind of long-standing, and they have been cooperating with many regulatory authorities to oversee Islamic finance, and especially providing technical advice, international organizations like World Bank or Monetary Fund, Islamic Development Bank, as well as standard setters. And by the way, it's very important for you to also understand that it was the IMF efforts, which played a very crystal and crucial role in establishing the IFSB through coordinating, hosting many consultative meetings among stakeholders, which helped the establishment of the IFSB in 2002. And just to share with you, the Central Bank of Pakistan, that time led by His Excellency the Governor, Dr. Ishaq Hussain, he's one of the founding members of the IFSB. At that time, one of the 9 founding members who actually helped the Islamic development globally. So you can imagine that the Central Bank of Pakistan was one of the visionary central banks which was part of the establishing, promoting Islamic finance and part of the founding team. And I have the privilege to work with the founding team as the Secretary of the IFSB with the likes of Professor Ifad, the inaugural Secretary General, and also the second Secretary General, Mr. Jasim Ahmed, and as so on. So this is basically a kind of, we need to understand this historical context as well. So before we can appreciate the international development. And if you look at the comparison between IFSB and IOFI, there's a lot of people get confused. And it's not surprising that many people sometimes hear the word IFSB even first time. It just 2 weeks ago, I was conducting a program for risk management officers. And when I asked them a question that, how many guiding principles the IFSB has issued for risk management, and I was very actually, got confused, and they asked me, what is the IFSB actually? So imagine you are in Islamic Bank Risk Management Department, and you are actually following the guidance, in order to, manage the risk for Islamic Bank, and you're not aware of even the risk management guiding principle issued by IFSB. So that tells you the kind of awareness that we need, and as a part of spreading the awareness to the broader community. And I think I feel very privileged to contribute in that context to create awareness to the industry, to the people, the role of the international institution in the development of Islamic finance. And the IFSB is a Kuala Lumpur-based, basically, Islamic finance institution. It has a mandate, of cross-sectoral mandate, because it also follow IAS, It also follows, to and a different, IAS, IOSCO, and it issues risk management, capital, liquidity, governance, stress testing, core principles, and they are actually the key standard issued by the IFSB. And IOFI, on the other hand, is the institution that was founded before even IFSB, and it has played a very key role in the promoting the Sharia accounting, auditing, governance standards, and of course they complement the IASB, IFRS standards in terms of and they do have the professional development program as well. And if you particularly look at the IFSB, the question normally people ask me is that what does the IFSB do basically? What's their role? So if you look at their key objectives, you can see that the IFSB, which started from 9 founding members in 2003, it has now 187 members as of June 2020, which are operating in 57 jurisdictions. So 57 jurisdictions mean that's a lot of contribution to the industry. They have 79 RSA regulatory supervisory authorities, 99 multiplayers, 9 intergovernmental institutions. They produce quality research. They establish cooperation with international standard setting bodies. They provide guidance on effective supervision and regulation. They do have a database on Islamic finance, one of the most authentic prudential structural database for Islamic financial institution, which is called PCB, is being done by the IFSB, having more than 23 central banks reporting that data on the to them, and of course that data is publicly available for the people to conduct research and see the development on their IFSB website. And also it provides implementation, development of human capital, develop standards for the industry. So that's the kind of a role that we need to understand the international institutions. And within that role, the IFSB so far has, from its inception, has issued 32 standards, guiding principle, and technical note. And those 32 standards basically, includes the banking segment, which includes 21 standards, which covers risk management, capital adequacy, liquidity, corporate governance, supervisory review process, core principle, stress testing, transparency, and Sharia compliant LOLR and financial inclusion. On the other hand, it also have the cover standard for capital. 6 standards have been issued for ICM, Islamic capital market. 3 standards, and also the 2 standard for cross-sectoral. So if you look all of these, imagine when I joined the IFSB back in 2007. That time the IFSB had issued only 2 standards. So imagine that starting from that until 32 standards. So if you want to understand the regulatory development, you probably have to spend a lot of time to understand these standards, to understand the relevance, implication, and the potential perspective and of effective supervision for Islamic banks globally. Now, if you look at one of the things that the internationally the key development that has happened, in the light of IFSB work, is the appreciation of the IFSB work and recognition of the IFSB work in the global state. And if you look at these basically these core principles, and I'm very happy to share with you that I was very privileged to when I was at the IFSB to work on these core principles, set up, draft these core principles, part of the team that was the working group comprising 23 regulators, and I was working as the project manager for this core principle. We had a one determination that time that in the future, I'm talking about 2012 basically. 2012, we were thinking that if the IMF, when these core principles are issued, if they adopt them in their EFSA, National Sector Assessment, process, in the then this will be a game changer for the industry, because it means that Islamic finance principle will be applied will be looked from the IMF point of view in the assessment, and the IMF will grade those central banks in terms of these core principles on their regulatory capacity, supervision, and also effective supervision. So that basically is a great achievement, and I believe that not only the CPFR by the IMF, but also the recently the Financial Stability Board also adopted the IFSB CPFR core principle into their, the compendium of standards. So it means they will also look at it, the jurisdiction from these. So to these two major developments basically at the international level reflect the importance of basically, the core principle, and it consolidates the international recognition of Islamic finance and robust regulatory ecosystem. And I think the IMF endorsement is not just the, is monetarist landmark for the Islamic finance industry, but actually they also will help the supervisors, in terms of achieving greater consistency, greater convergence, the regulatory surveillance oversight, and also, a very integrated prudential framework moving forward for the industry. And I think as a result of that, we can see that once the IMF start assessment of these central banks, which are more than 15% market share in the future, you will see that Islamic finance become more, it's kind of a game changer for the global industry in terms of, the attention. Now, in my experience, what I've seen is that there are four key major regulatory impediments. The problem is that, and these, impediments basically, what I say is they varies from one jurisdiction to another. Obviously, because some jurisdictions have well-developed public and market infrastructure supporting Islamic finance, while the other they are developing at a slower pace, and then there are few central banks which are basically, starting to get into that seriously in recent time. So imagine that there is a lot of divergence from the globally in terms of, developing the Islamic finance. Number one on my list always goes the enabling legal environment framework, which has a direct impact on the business of financial institutions, including the Islamic banks. Because I believe that, a fair and a transparent legal framework, including the proper enforcement, it brings a legal certainty, predictability of the outcome, and therefore I believe that a sound legal framework includes the, appropriate legal infrastructure with appropriate financial laws, which accommodate the specificities of Islamic banks. And actually, if you take example, for example, the contract laws, the insolvency laws, the trust laws, the laws governing collateral, for Islamic banks, they are the one basically affect the types of product services the Islamic bank can offer within a jurisdiction. So, and on top of that, if you include these issues, the tax neutrality provisions are also very important within the part of the framework, which should be given consideration because it's imperative to ensure that Islamic financial instruments and its structures are not subject to high tax, liabilities, because that will create the regulatory disadvantage and arbitrage and compared to the conventional counterpart, which is conventional bank. That's number one, basically. Number two is the strong potential regulatory framework, which is an important component in the development of, Islamic finance to sustainable growth and foster financial stability, which includes robust supervisory regulatory framework in line with the recommendation of the Basel Committee and the IFSB, which covers the core minimum. For example, investment account holder risk management, stress testing, corporate governance, Sharia governance, capital adequacy, stress testing, to provide a level playing field to market players. And the third one is the active financial market infrastructure, which is also a very important key component because lack of primary and secondary market for Sharia compliant instrument, stock issuance, for example, trade and settlement, limited Islamic interbank market, inefficient infrastructure, including liquidity infrastructure. This is something very important for the industry, and also the safety nets, which I'll talk about slightly later, and then the supervisory capacity. This is another issue which is very important as well, because it is a key element in the development of Islamic finance. For example, lack of a qualified professional with the depth and breadth of Islamic finance knowledge and experience is common in many countries in which Islamic finance operates. I'm very happy that the CEIF is contributing to that cause, because this is a global issue now, and it's something that they are preparing the future leader for Islamic finance, and therefore it's very imperative for academic and training institutions to work together basically with the market participant like the market players, supervisor, to develop and enhance the skill, expertise, and also the capabilities needed to support the development of industry. So this basically, in my view, the range of expertise, should include the a broad-based approach, which basically covered, finance professionals and also the Sharia scholars. That's basically the, what I say is are the key, embodiments. But if you look at from my experience, if you look at, uh, the key, what are the key components, for example, how can you say that, how can you figure out one country or one central bank that you say that, okay, this is very serious in Islamic finance, promoting the development of Islamic finance, right? So there are seven components in my experience which I have seen, having conducted, a workshop in different 20 plus central banks and working with the IMF and the World Bank. I've seen that come to conclusion that there's at least seven key structures which are very essential elements, and what I call them key priorities should be. Number one is the formal structure. So if you don't have a roadmap in your country as a central bank, you don't have a roadmap for Islamic finance, it means basically that you are just working on a ad hoc basis. You absolutely have no idea where you are heading toward. You don't have an idea, that you don't have the blueprint, you don't have the action plan, you don't have the medium term action plan, that next year, after 2 years, what are you going to do? After 3 years, what kind of regulation you are going to produce? After 5 years, what is your approach basically? So that's the very first thing. The formal structure is very important. It means the formal unit are division within a clear mandate and adequate, capacity within the central bank. So meaning that this formal structure should be integrated within the central bank, so that it will integrated working with the stability department, supervision department, offsite department, consumer protection department, and also the other component. So that means you can't run you can't supervise Islamic finance in central bank without having any department. So it means your conventional people, those people will be supervising without any proper requisite and knowledge. So number two, precondition. So you need to address the key preconditions. Number three, accounting principles. So you need to have, as a country, you need to adopt a comprehensive and well-defined accounting principle and rules that are internationally accepted. For example, the rules of IFSB, IFRS, IOFI for Islamic banks. And also you need to issue key prudential standards. If you have issued key prudential standards, that means that shows the seriousness of the central bank to promote the development of Islamic finance. And the next one is the supervision approach. So your supervision approach should be a technique, for example, the on-site supervision, the off-site surveillance, and also the periodic supervisory reporting must be customized to specificity of Islamic banking, basically. Your manuals for on-site, the off-site should be also mandated. And the sixth one is a payment and clearing system. That means you should have in place the efficient, well-regulated payment and clearing system, such as the real-time gross settlement system, which is RTGS, clearing house and trade repository, and like the CDSE. And then also the number seven is the HQLA scoop, which is the market, meaning that the high-quality liquid assets. So you need to develop a market, Sharia compliant scoop market. It is the responsibility of the central bank together with the Ministry of Finance to develop a market where the primary market for the scoop and the secondary market for the scoop is also, it's also active in not in terms of issuing, but also the settlement, the trading, and also the issuance process. So that actually the seven components that basically gives the overall perspective. And as I said that within the central bank, this slide actually gives you a visual view that how the formal structure can be integrated within a central bank for the supervisor for the promotion of Islamic banking development. If you look at it, what I suggested was that you need to have a formal department, a department that basically is working closely with the the research and policies, supervision, financial stability, and also the consumer protection, which has basically the clear mandate, integration, and accountability. And as a result, you will see the Islamic finance development in a much more holistic way in the country. The first thing, the challenge that comes to, to the central banks, to the supervisor globally, is is other than the other than Sudan and Iran, all the central banks basically, is how to ensure level playing field. So what does it mean basically? It means very simple, what I call it, no favors, no obstacle approach. Meaning that you're not going to give any favor to Islamic Bank. But at the same time, you're also not going to create any obstacle for them. So meaning that you need to ensure a level playing field. Meaning that if it's liquidity management, if the conventional bank have access to treasury bill on a regular basis, because they don't have a problem with the Sharia compliance. But then the Islamic bank should also have access to an alternative to the treasury bill where Islamic bank can invest their surplus fund and also they can utilize whenever they need the liquidity as well. So that idea basically indicates the concerns of level playing field. So no favors, no obstacle. So principle of proportionality is very important in that. So the central bank needs to provide adequate legal basis, so level playing field. So there's no one is not at a disadvantage with the other one, and then there should be a consistent supervisory approaches. For example, Basel III reform, such as capital, leverage, liquidity. So you can't have capital adequacy ratio 10% for conventional and 11% for Islamic, or you can't have LCR 100% for conventional and 120% for Islamic bank. You can't have leverage ratio more than 3%, less than 3% for one, and the more than 3% for the other one. So that basically gives you the kind of level playing field. So when you are a supervisor, you are basically you're trying to play at the both sides. One is the regulation part, and I want you to understand this slide very important because if you have worked if you work as a supervisor or if you intend to work as a supervisor, these are the two important things that will help you. First is the regulation. You need to set up a key regulation. You need to have proper regulation in place in order to regulate Islamic bank. That covers governance, which covers the board, senior management oversight, corporate governance, Sharia governance, capital adequacy assessment process, which includes the ICAP, going concern capital tier 1, gone concern tier 2, ICAP, Pillar 1, Pillar 2 risk, liquidity management, which covers the normal liquidity ratios, LCR, NSFR, macroprudential measures, for example, counter-cyclical buffer, loan-to-value ratio, debt services to income ratio, financial stability oversight council. That's the regulation part. As a supervisor, central bank, you have to provide these regulations to the Islamic bank. On the supervision side, you have to take the more kind of a forward-looking approach of the risk profile of individual banks. Forward-looking approach means stress testing. I'll get to that in the next slide. And then your on-site, off-site activities should be mix of the surveillance, for capturing the Islamic finance specificities. You should have interagency and intra-agency cooperation agreement, consolidated supervision, and home host cooperation for the purpose of developing the Islamic finance. For the forward-looking approach, the supervisor actually used the stress testing as one of the risk management tools. Of course, supervisor used for stress testing for the top-down approach. Risk management tool for Islamic bank as well. They need to take into account, for example, right now in COVID-19 pandemic crisis, it's very important for the Islamic bank and supervisor to take both the top-down, bottom-up, constraint bottom-up, and also the historical different perspective of the stress testing, not only the product level, portfolio level, bank-wide, and also the group-wide, including both the different scenarios, including the flat tail one, the low frequency, high impact event, the black swan, the reverse stress testing, and so these are the things that is going to affect also to the also to the Islamic banks, and they should be ready in terms of appropriate models, whether they are deterministic or stochastic models, with the right parameters, they should be able to support the stability and sustainability. And the other buzzword now we are seeing globally is that the fintech and regulatory concern. And I think I'm sure all of you have read the Wirecard the report. How the governance issues, the accounting issues, how the risk management, and how the reportings and different out of the jurisdiction issues highlight the concern for the supervisor, and of course they are equally important for the Islamic banks. One of the blessing of the COVID-19 has been is the acceleration in the digitalization, and I think that digitalization has increased the fintech and the financial inclusion. So they have implication for Islamic bank as well. So we need to be very clear on that. The supervisor need to be very clear on that in terms of RegTech, SupTech, you know, and also we have very different guidelines available from IFSB, FSB, BCBS, you know, and lastly, the few points I want to highlight on the COVID-19 basically, and the COVID-19 basically, no doubt that we know that supervisors are facing a kind of extraordinary times with the COVID-19 pandemic, and what I call a start of a new normal, which may last for some time, because this pandemic has brought numerous supervisory implications, which requires basically, uh, you know, uh, uh, you know, measures that are both basically pragmatic and extraordinary. And in such stress testing time, it is expected that that the supervisory policy choices for the containment of the crisis, they will evolve, they will involve kind of certain degree of trade-offs, and therefore the supervisor should act, with agility and resilience, because ensuring financial stability is a kind of, it's not sprint basically, it's a marathon task, and therefore the magnitude and the speed is very important. And this is one of the policy paper that I wrote recently, with the Toronto Center, and I would like to highlight key points of them for how they impact the Islamic banks basically in terms of their non-performing financing, and how they will be looked at it, because there are so many perspectives we need to look at it, from the supervisory point of view, because we need to have very absolute clarity, on the regulatory interventions, what kind of regulatory intervention are for Islamic banks, uh, and ensuring the level playing field for Islamic bank, and also because it's a very tricky navigation and trade-off between regulatory capital requirement and economic growth. So one hand, the government wants to increase the GDP, wants to increase the economic growth, and especially in Pakistan recently, the central bank has announced that 5% of the private sector quota will be reserved for the private sector for the housing. Now, if you imagine, one hand you are concerned about the increasing, asset quality, non-performing assets as a result of the moratorium, because not many people will be, honoring the moratorium. They will be defaulting on that. The banks will be incurring a lot of NPF basically. As a result of that, there's a trade-off between banks now. What is the incentive for the Islamic banks to provide the financing at a very low rate, as well as to the customer that they know that they may not be able to pay back? So that requires intervention from the government in terms of support guarantees, guarantees in terms of 70% or 80% of the financing, or from the government Ministry of Finance, or it has been done in different central banks where the guarantees have been provided, because you want to ensure that the whole system remains stable and no one actually exploit the system. And also the liquidity crunch, because what I believe is that right now we will not see the insolvency crisis quickly. Rather, we will see the liquidity crisis, turning kind of turning into solvency crisis, meaning that the liquidity will be a kind of, because if you don't receive cash flows based on your, financial asset which you were supposed to receive, and because moratorium does not allow you to do that, that means cash flow will be affected. The money market is affected. The overall global markets, liquidity markets are tightened. So there was a liquidity crunch leading to the insolvency, and then also the supervisory support for the issuing sovereign scope for fiscal, deficits. Because the problem is that, you have classically two choices. One choice that, you have a deficit, you can issue bond. But right now, I think we need to also understand that country like Pakistan and some other emerging economies, they need to make sure that they provide equal opportunity to Islamic Bank as well. They need to consider issuing sukuk as well as a part of the measures. Together the central bank should work together with the Ministry of Finance and also with the government to ensure that the certain portion of the fiscal deficit will be financed through the sukuk, long-term sukuk. So that will allow the Islamic banks, also the businesses, to benefit from the opportunity, and also the building up the financial safety nets like insolvency regime, and also the safety net, the Sharia compliant deposit protection. And this is something that I just discussed with you. You can read that. And especially for Pakistan, as I said, this is a 425 basis point that was back in May 2020. Right now, the figure is 625 plus, if I can correctly recall. That is the highest basis point change in the shorter term globally. That is something the Islamic banks, the other banks, have to consider the stress testing in terms of sustainability and also the viability. Now, the last 5 7 minutes, I like to address. I believe I do have a time, Brother Ahmed, right? We still have 5 7 minutes. If you allow me, I can continue.
Yes, please, you have time. Yeah.
Okay, perfect. Thank you. So, lastly, because I thought that some of the participants will be from the academia, so, and also some of the audience will be in the who will be the future leader of Islamic finance. So I thought, let me share with them also some of the things that I have learned, and I want to share with you as well. Of course, the sustainability of any system, any structure, any institution, it depends on continuity of the human capital. So if you don't have a human capital, machines are not going to run everything in the future. It's the human capital that is going to run the central banks, going to run the Islamic Bank, going to run the international institution. So it's very important that we also pay attention when we are studying as a student. That, okay, what, because you are the future leader of Islamic finance. You need to have a passion, you need to have a hard working, and of course, you need to have a perseverance, because you might hear every now and then, there's no difference in Islamic and conventional, and the same hardliner people coming from conventional banks going to Islamic banks, that they keep on telling you it's the same thing. You know, so you have to have a very, you need to be very passionate, and a very famous saying, that you need to work for your passion, not for your pension. So if you work for your pension, you're not working for your passion, basically. So the hard working attitude, you need to be perseverant, because you need to continue for believing this is the fundamental that we need to exercise. And you need to develop a core competence, being a subject matter expert. When you are at academia, you need to focus on one subject at one time, one sector at one time. Be expert in that. What I call it, generalist to vertical specialist. So, and then the same time, you know, nothing. You should never underestimate the you know the work of humility and integrity. The professional integrity is something very important that will go with you rest of your life. You need to build. You need to have principle and believe on those principles in good time and bad time, because they are the one, that will give you a professional outlook in the future. And what I say, if you work for the welfare, for the community, you can't actually measure the good that you are contributing basically back to the society. At the same time, and I say, it's not just to say let's do Islamic finance. At the same time, if we don't believe on it, and if you're not a good practicing Muslim, what I mean by good practicing Muslim is that, it's not that, we just, say, we believe on Tawheed, etc. We need to practice being a Muslim. We need to start from our home. When I started living on that, first thing I did was I changed my bank accounts to Islamic Bank. I changed my all family accounts to Islamic Bank. I tried to get the product which are Islamic. So you need to start from your home first before you advocate globally. So I think this is very important, that you need to have a professional network. Networking as well is very important in order to become a very good leader in the future for Islamic finance. And what I call it, there are two ways. One way is you can do business as usual. That is the kind of status quo approach. The new approach that I recommend basically is that, be it Islamic bank or central bank, especially central bank, we need to have a very on-job training induction. Induction must be Islamic finance oriented. The qualification, the requirement should be set in the job description very clearly. What are the expectations? Basically, the rotation, the retention. This should be a kind of Islamic finance oriented. So what is the way out? The way out is the formal unit. That's what I spoke to you just earlier on another slide. Now, as a result, in my concluding remarks, I would say, Islamic finance, I don't think it's wise now to say that Islamic finance is swimming against the tide. Absolutely, that's not the way now. We have more than 300 Islamic financial institutions. It's more than $2 trillion industry. We have billions of dollars, the top leader in Islamic finance, the school, everything. So what important is that this growth and this increasing systematic importance is necessitate an effective regulatory environment. So you can't run, supervise an Islamic bank without having a regulatory environment. Number one. Number two, regulation and supervision of Islamic bank without recognition of their specific unique features is not going to be robust. So you need to enhance your quantitative metrics and models for Islamic bank supervision. And also, there is some progress. I know this, despite some progress in capacity building, we still have a long way to go. Islamic finance school should develop specific curricula for supervisors. And I think this is very important as well. You have, very good example is the Yale University, which has a master in central banking. So why can't we have a master in Islamic banking also for supervisors? That will give them a kind of new way to look at the academia. Within the academia, the finance school, why don't we introduce risk management, courses dedicated to Islamic banks? Why don't we add Islamic capital market related prudential supervision? Why don't we add, this is something I've been propagating quite long, and I'll be working definitely on these in the future as well. But this is something we need to consider. And also IFSB standard complemented by IFM IOP are the paradigm, in my view, for the prudential regulation of Islamic banks globally. And IMF and other international institutions, they play a very vital role, and therefore we need to make sure the professional talent, which is very difficult to acquire and retain, maybe it's difficult, it's easy in the COVID time because there's a lot of uncertainty, but generally the talent, finding the real talent is a big issue. And lastly, we need to keep on improving. We should never be complacent. Nothing is perfect. We need to keep on improving. We need to improve our regulatory system, our banking system, our curriculum, our teaching methodology, wherever we are, basically, in order to contribute back to the society. And I think with that, that was my just a very quick, brief overview. And please, if you want to, not only in this session, but even after that, if you want to reach out to me, you can reach out to me in any through this platform. You can email me, or you can, connect with me. I'll be very happy to answer all your questions. And these are some of the, recommended reading. If you want to read as well, I'll be very happy to provide you. But I think with that, I would like to pass back to, Mr. Ahmed, for the,
Brother Dr. Jamshaid, and it's very enlightening, and thank you for a very comprehensive overview of what is happening in the international front, especially what the regulators are thinking, what are the international bodies are thinking about Islamic finance, and as many of us are interested to know what IMF is doing. And it was good to note that IMF has not only accepted Islamic finance as a separate banking area, but it is also now, monitoring it in a sense, and they have their own parameters. And that also probably answers many of the queries that for those who think that Islamic banking is not different from conventional banking, because if it's not different, then how IMF type institutions are now separately, monitoring it. And I'll now, we have the opportunity of time, so we'll take questions. I will pass one question that I have in mind from your slide, where you talk about the level playing field. So how do you see the Pakistan in terms of level playing field? Because I noted that you highlighted accounting aspects that are important. The law need to have need to have a separate law probably. You need to have safety nets like discount windows and framework for liquidity
Yeah,
management. So,
yeah.
what's your take on Pakistan? What we need to do?
I think you see, if you if you asked me this question 5 years ago, my answer would have been different. If you ask me now, I would say, the central bank has worked a lot of things last 5 years, and I think this is something very positive development. Let's look at that way. As I said, it's never complete. Look at any other central banks. I can tell you a different problems in different central banks. But I think the Pakistan, of course, we know that they are trying their level best to provide, but I think still there's a lot of things they need to improve. In particular, my concern, as I highlighted, is the liquidity management tool, because Islamic banks, they need to have a regular access to scoop instruments from the central bank in order to manage their liquidity. Now, of course, they need to find out the way, just like the Bahrain Central Bank, they have a Salam Scoop regular issue, even a Ijara one, Malaysia, and some other, they regularly issue, so that there's a continuous flow of the scoops to the Islamic bank. It's not that Islamic banks are special; it's because they don't have any other venue. So you're not putting them in a disadvantage, because the conventional bank can buy any treasury bill they want at their will, at any time, and even Islamic bank cannot even bid for that, because it's not halal, right? So conventional one. So this is fundamental issue that I see, that both in terms of liquidity management, and also this is very important in terms of development of the Sharia compliant lender of last resort, because if you have these instruments available, you can exercise the LLR, Sharia compliant point of view, in a more effective way. And of course, on top of that, there's also need to increase the awareness and develop effective, include the Sharia compliant deposit protection scheme as well. Because right now they have they have set up a deposit protection fund at the central bank, but it's not clear in terms of the Islamic bank protection, the pools, and so many other things. And even when I talk to the people, even they don't even know whether their deposit is protected or not for Islamic bank customers. So there's a lot of things that the central bank, of course, need to consider as well. The consumer protection is the other very important issue that need to be also work on that. And also the prudential framework. So you need to make prudential framework available, to the Islamic bank in light of the changing the different condition. I think overall, you see, they have issued a lot of guidelines, the Basel III, the Sharia governance, and so many others. But of course, there's something, an insolvency law. That's something, another one is very important also to be mentioned, that they need to also work on that. Because ultimately, you don't expect one institution to fail, and then what will happen to the asset and also to the Islamic bank, and still remain unclear in terms of insolvency regime. I hope that answers you, Brother Ahmed.
So I think what probably because Islamic finance is still new, so we hope to have the level playing field. The sooner the better. But I think this is one of the function of time as well.
Yes,
So
yes, that's true. I
now,
think that, yes, that's true. I think what I believe is that the central bank should always have a roadmap, because especially for Islamic banks, for the short term one, the medium term one, the long term one, what exactly is coming? Because the cost implication, you can't ignore now 15. If this market share touch 20% 2 years from now or 3 years from now, I can tell you that 20% is going to be very significant in Pakistani context, because that's where the real things will start happening. Because you don't want that happen, where you need to. This is a time now, good time to fix all those the kind of instrument, the gaps that you have in the regulatory regime, in order to ensure that once you are, let's say, you are assessed under the IMF FSF on these core principles, I can tell you that, frankly speaking, that the rating may not be good, because there are a lot of things that the central bank does not have even. So it means that when you will be assessed, your rating will not be good. So it's very important that you work start working now in terms of the moving forward. So before you are being assessed in the future.
so I think Dr. Jamshaid, so it's not only central bank, but the Federal Ministry of Finance should also realize this,
Yes,
because they
yes,
are being
because
assessed on.
Absolutely, because ultimately, because the central bank rating is kind of rating will be reflected for the other sector as well, because especially the FDIs and other central bank that deal with you as a central bank, they look at your rating, they look at your a lot of financial strength, they look at other parameters basically. So ultimately, it affects the Ministry of Finance, the debt committee, the DMO office, and also the federal government as well. So it's very important that they work together, in a team to try to sort out these, at least these slow issues.
So the next question is again, I think similar, how the liquidity issues can be handled in connection with Islamic banks. What your suggestions are?
Can you repeat, please? I could not.
The liquidity issues, the excess
Yeah,
liquidity issue for Islamic
I
banks.
think, as I said, that I think first thing, you see, for a central bank, it's not a difficult issue to uh, to to set up a kind of a think tank within the central bank and come up with the model that will basically allow them to issue regular scoops to the Islamic Bank. Now, they are actually, of course, the government will be very happy. The central bank will be in a very good position to have a regular issuance, because ultimately you should not issue one scoop now, then one end of the year, and then one in next quarter, and then that's it. This is a kind of issue. If we want to develop Islamic capital market in Pakistan, especially the role of SECP is also very inevitable. You need to work, State Bank need to work with the SECP, and of course these have to work together. The framework needs to be set up, the coordination has to be there, because the investor protection will go to the SECP, the regulatory treatment will go to the central bank, right? So the regulatory treatment is not a big problem for Islamic banks to handle. The problem is the procedure and the regular issuance and the settlement and trading, so that the banks feel that for the short-term liquidity, they don't even have to go elsewhere, and they are given the opportunity to invest in a short term and also medium term. So that means they just have to find a good model. There are good examples available in many central banks now. It's not a rocket science anymore. It's just that they have to find right structure and the right the tenure and the reason, and also the collateral, in order to allow Islamic banks to continuously access the park that liquidity get returned, instead of being parking that liquidity getting not any return. That's completely disadvantage.
Yeah, and I like to just add that after like a 2.5 year of waiting, the first sukuk was issued in 3 months back. So there was a pause of 2.5 year until
Yeah.
and during that time there was no sukuk from the government side. But luckily, for the last 3 months, we have a regular sukuk issuance, and this time the federal budget probably for the first time has spelled out a 450 billion rupee target for the sukuk. So this gives a hope to
This is
us.
exactly. This will actually set a kind of a precedent and also an example for the future deficits and the mechanism to control the deficit within the country. I think because this has been, we have a problem with the foreign debt, a lot of issues with the foreign currency depreciation. As long as you keep the debt in local currency, you're not going to have a big impact, big issues, irrespective how the market behave internationally. All the time, $1, one just change, then how many billions actually pile up the debt in local currency. So I think this is a very good step. But one important thing is that what is the mechanism of transforming that 300, 400 billion into action plan? So, for example, how many the federal government, the central bank, the contract are going to issue, the underlying assets, the collateral. So the banks are ready to prepare themselves, for that kind of liquidity to absorb. I think this is win-win for both the government, central bank, and also for the Islamic Bank as well.
Yeah, and just like to add that over the last few years, like over 7, 8 years, whenever the government has issued a sukuk, it was
Yeah,
always
it
cheaper
was
than the interest-based bond.
yeah,
So you are not only doing Islamic and according to the Constitution of Pakistan, but you're also saving money for the people of Pakistan. Now,
absolutely,
another
and
question. Yeah.
absolutely. Also remember the prevailing market rate, policy rate, and also in the future, what we see them will be very low as well, because this is not going to, this issue is not going to settle in next 12 months even. Not, not definitely. So the only instrument that can give you a very good return is the scope, because the policy rate bond market is very kind of, those assets can't generate except the Kyber and plus LIBOR plus. So those are not the instrument that will give you even handsome return compared to the asset that will generate, and you benchmark the return for the scoop basically, even for the next coming years. So investor would have more appetite to hold those instruments and even pay the price, at a lower price, as well as.
There was one question about accounting, and one of the participants has asked that there's normally a difference of opinion and views between Islamic accounting professionals and Sharia scholars, due to which some accountants have odd views about Islamic banking. And thus, what can be done to make this alignment? Good difference is appreciated, but not on the core concept. Further, some requirement for legal counsel should be kept by IFSB, IOP, and regulator for professional courses and for legal counsels. So probably he's like to highlight two things: Islamic accounting, or the lack of accounting about Islamic modes, and the gaps or the flaws in the international accounting standards that are practiced in Pakistan with respect to Islamic finance has created gaps between scholars and the practitioners, because they were not aware of Islamic treatment of those modes. And the second part is the legal fraternity, and the suggestion is that IFSB and IOP and the regulator should also try to tame the legal fraternity, the lawyers who draft the contracts, and they try to copy or maybe try to fit the conventional terms in the Islamic contracts. Yes.
I think these are very good questions, I think, my gentleman. You see, the problem is, I think we need to understand that IOP has a mandate for accounting issues, right? Now, if you don't follow it, this is a separate issue. Any country, because it's a voluntary, it's not mandated. But it's not good for us to say that there's nothing exists. The problem is that most of the time we are actually unaware of the best practices. Just like I give you example, there's a one gentleman working in a risk management department for Islamic bank, and he does not know what is IFSB. So this is the fundamental which I'm talking about, creating the right mindset in our institution. So the induction program does not even give the orientation that what are the international institutions, where even in their courses, in their colleges, universities, they have not been informed. If they are informed, they didn't learn properly. So this is something that we need to leave it to the supervisor, because at the end of the day, this is supervisor responsibility to implement, and of course the timing is the prerogative of the supervisor. But in terms of coordination, I agree that there is a need for the IFSB, IOP, and IFM need to work collectively on certain issues and raising awareness, etc. And they are working together on certain issues. For example, recently IFSB working with the IOP to develop a joint Sharia governance standard instead of having both of them separately, right? This is a good effort we should see in the future, basically. Regarding the lawyers, I think the problem is that when this awareness goes up, increases, basically, we will see more legal fraternity getting into this act, basically. We see different countries. I saw even the judges getting training, on Islamic finance, lawyers getting training on Islamic finance, because at the end of the day, Islamic banks, when they establish a contract, it's still the same civil code. We have to draft the contract which are actually applicable in existing code. So it's been done already in the market. Maybe some of them are not aware of it. The issue is that the awareness, at a mass level, more at a university level, and maybe IBA should have a separate session for judges or lawyers on Islamic finance. That would be a fantastic idea to contribute back to the raise this awareness, to the community.
Yes, we have tried to engage some judges of banking courts, and even today I was discussing with the representative of PBA that we should demand now Islamic banking courts in Pakistan.
Yes.
And
certification, minimum certifications, kind of a duration for them to have understanding of 5 days or hours, few hours for them. This is something that I see is going to be the future. Yes, next question.
Yeah, the other question is that, Dr. Chattha, in your opinion, can we have an ex-ante regulatory framework or a preemptive regulatory framework along with the ex-post regulation to ensure? He's talking about that. Should we have preemptive regulation and regulatory framework? Because sometimes we are reactive. Something when happen, bad things happen, then we wake up and suddenly make some law.
No,
So
actually, in the regulatory word, you are right. I mean, that actually tells you also the slowness and also the priority. So sometimes, you are good in reacting because if you're something, it has happened and now you have to do it, right? I think that's not the ideal approach. Basically, the ideal approach is not only also having ex ante. It has to be the mix, but the mix has to be determined by the nature of the jurisdiction and also the financial soundness and infrastructure. For example, if you have the basic necessity core minimum regulation infrastructure, right? So your concern is always is not to get worried about if someone wants to get in, how they will get in. No, they know if there's a minimum available, they have to follow that. Your only problem will be what happens if that core minimum does not work. What will you do then? That is what I call a reactive. So then you will come up with a new one, you know. So you will immediately respond to that, but you would be ready for that. But if you don't have the ex ante and then you always do the ex post, I think that's not a suitable and also ideal scenario for supervising.
So let's move on the next question. The question is, disparity exists especially in areas such as number of Sharia principle employed and its usage in banking activities in different countries. How we may resolve this or minimize this?
Well, if you are, I mean, if you are working in Pakistan, this should not be your problem. That's number one, because you have to deal with Pakistani legal law, and if you have a specific issue here, that would be great to assist you. But normally there is a convergence. There's convergence like, you know, Islamic finance 15 years ago. Now there's a lot of things have changed. There's a lot of understanding of the, standardizing the terminology, the cases, the precedent are available. So, and I am not the believer that you need to, the Sharia should, the law should be standardized, because you need to keep those rooms which have been left there as a beauty of the differences. What we need to understand is what is acceptable in our market for our consumer. That should be our primary concern, because you can't bring a product from outside and impose here which is not accepted into the FIC here and also the consumer market. So it's a kind of a tricky and delicate relationship that you need to find it out.
Another question, this next question is about hiring the HR, or in the context of having right human resource. Is there any best practice being used at hiring or promoting a resource to establish her will to serve, or his will to serve and develop Islamic finance?
You see, I mean, IFSB is a good example, because you are expected to have Islamic finance qualification. This is a very good classic example of, because you want to make sure that the guy you employ has the minimum qualification. Because if you don't have the minimum qualification, you wouldn't appreciate the beauty of the contracts and also the application of the practice. If you are, and if you don't have the experience, I'm very flexy on that, because experience something, not everyone will bring experience, especially the new one. But at least the new one will bring the right mindset and the attitude with the right ingredient in terms of the technical skill set, which is being taught at the university level. So that's very important. And similarly, I have seen some other institution, and even some central bank, they make it very clear that they have to, you know, that particular post, somebody has to have the subject matter expert has to have that particular education. So this is something you will see that the role of HR will be evolving in the future as well, because you can't actually run the same JD for everyone. Basically, that's not going to work.
And just to add that, normally I tell to my students now, and even when we discuss the academic side, that today if you're a BBA degree holder or a business graduate, and you don't know Islamic finance, especially in Pakistan or countries like Muslim countries, then your finance qualification is incomplete. So you have a degree, but not the qualification, right qualification to the market. So Islamic finance is like now core principles of finance that you must know. Now let's come to the next question. Dr. Saab, what's your view regarding liquidity management in the Middle East and in regions where commodity murabaha will be a good option to use as a first tool?
Yeah, you see, everyone has a different view on that. In fact, in 2010, when I was working on drafting a standard for commodity murabba, because the problem at that time was that this practice was prevalent in different regions, so they needed to be regulated. So what we tried to do was to issue a guidance note on commodity murabba transaction. And if you look at the commodity murabba transactions, that particular standard GN2 basically, I think I would recommend the gentleman to read that standard. And I think it allow you the there are certain conditions that you need to follow basically. And if you don't follow those conditions basically, then whether you call it commodity murabba or you call it something else, it's not going to be respected. And of course, different jurisdictions have different point of view. But recently, there's a one consensus that is coming up, and I think I will refer that paper. It is on Sharia compliant lender of last resort facility. This is based on the public interest because Islamic bank have to get the liquidity in emergency. Like you need liquidity in 2 minutes or 5 minutes because you are in trouble now. So and the conventional instrument will not allow you to do that. What will you do? Will you accept the conventional option or will you accept the Islamic option, which is certainly based on public interest? So this and there's a paper on that also. I wrote that paper available also on the IFSB website. Sharia compliant lender of last resort facility. There is a mention of commodity murabba transaction, and in GCC basically, central bank are using, of course, for that purpose as well. But normally it is, defined conditions, just like the IOP has set out certain conditions. So if you meet those conditions, then I'm not the Sharia scholar to say it's a halal or haram. I will simply say if it meet those conditions, then what's wrong with it? We should not just try to criticize for the purpose of criticizing. There's a standard available, and if I follow that standard, then what's wrong with that, basically? But this should not be a first primary choice. That's the key point. You should use other instrument. If you can't use them for some reason, legal or whatever, then this can be used. But it's still Sharia compliant. Yes, there is a different view on that, but as long as you meet the condition or requirement, it should not be a problem to utilize that instrument.
Thank you. I think that's the right answer, that it should not be the first choice. And if you are following all the Sharia requirements and the regulatory requirements and doing it correctly, then maybe we can accept this transaction. How far Islamic banking laws are applicable globally or acceptable globally? Or probably you want to ask the Islamic banking law or the Sharia law, or it has become just a Muslim population-based banking? What's your view?
No, I think if you look at it, I mean, of course, this argument is also not good because at the end of the day, Islamic banking, when they started, they didn't start with the mindset that it will be for everyone. If that was the case initially, then they wouldn't need the separate institution, right? So the idea was that to cater the Muslim need to exercise their faith, etc. Now, once they do that, and we have experienced that it has become a universe, it has a kind of universal appeal because it does not differentiate between any society, any culture, any race, and it's very fair, ethical, then the acceptability becomes more important. So therefore, different countries like Singapore, as I said, Hong Kong, Bank of England, Mauritius, so many other countries which are actually having Islamic finance, they're also applying these regulations across the board in their jurisdiction, which means that this can be, of course, there's extra effort for you to have to do it. You need to have the proper process. Go back to the 4 point that I mentioned early in the early in the slide. The minimum core you need to have, the legal enabling environment. This is a kind of a little pain for the supervisor, for the government authorities, because you can't do them unless you have the specific statutes or the laws or the regulation, because otherwise there will be always conflict in the judiciary and the legal fraternity.
Good. I think we have answered this question. It can come again that the level playing absence of level playing field is probably because as conventional banking is quite old and we are new as an industry. So I think yes, this will come up with time. But if the regulators are serious and the government is serious, that gap will be minimum. Otherwise,
Yes.
it will take a long
No,
time.
absolutely, absolutely. As I said, no favor, no obstacle. Very simple approach. And we should not see a supervisor giving a favor to Islamic banks. No, this is a very wrong perception I have seen in the market. And and what we are asking is simple. Supervisor need to make sure that there is no regulatory arbitrage. You don't put Islamic bank because it's Islamic, you put them at disadvantage. Disadvantage of what? In terms of liquidity, in terms of other issues. So we should, and there will not be a point where will you see that the level playing field will be horizontal all the time. There will be always like something always coming up. But the most important thing is to ensure that this difference remains narrow all the time.
Yeah. So just probably the last question. What are your views on derivatives and your views about it was probably IFSB has some conflict with IOP on this point. I'm not sure what but if you
No, no, no.
you
You see, my simple answer to this question will be, whoever asked the question, gentlemen, is refer him back to the double IFM. Double IFM is the other standard setting body, which actually has issued the guidelines for the derivative for Islamic finance perspective. And I would recommend that gentleman to go and read the conditions and the condition under which circumstances the profit rate swap can be used, the currency swap can be used, the liquidity, etc., the option, etc. The IFSB does not basically provide the opinion on that, the Sharia legitimacy, because this is not the mandate of the IFSB. Rather, its mandate is to provide the prudential treatment. If you are using profit rate swap for Islamic bank, then what is the prudential treatment for Islamic bank? That is what the IFSB can do. How to use it is the mandate of the AOP to provide you Sharia parameters whether to use it or not, right? How to use it, the structure, you will get it from double IFM. Is that okay now? Is it okay now? Are we done? Okay, guys, thank you very much. Now, I think I've been informed that this is time to wrap up now. Thank you
yeah
very much for listening.
Dr. Jamshaid, I
Yes.
think there was some connection issue at my place,
Okay.
so I
I
was
see. I see.
just
Okay.
lost you.
So you would
But
like to
just
conclude now?
yeah,
Please go ahead.
yeah,
So I
I would
think from
like to
my
thank
side,
you, Dr. Jamshaid, for a very wonderful session. I'm sure I can see the comments of the participants. They were very much happy. They were thanking you. They like the information that you have shared, and it was wonderful. to see the regulatory perspective, the international perspective for Islamic finance. And I'm sure we have a lot of learning point from your presentation, from your insightful talk. And on behalf of IBA Center for Excellence in Islamic Finance, I'd like to thank you again for giving your time and covering this very important topic. And I'm sure we have quite a good number of learning points from you. I'm sure that the central bank will take note of it, the government will take note of it, and the banking segment also will take note of this. And just to let our participant know that we will share the video of this session on our Facebook. So you can again see what Dr. Jamshaid has said. You can refer to your colleagues and friends. So thank you once again, everyone, for joining us today. Thank you, Dr. Saab, for giving us time. And with this, Jazakallah khair, and thank you, everyone. Assalamu alaikum. We'd like to wrap up the session.
Thank you very much. Thank you very much.